Okay, good evening, guys. Thanks for your patience. Capital with a daily strategy podcast for August 20th, 2020. For those of you keeping score at home, Danny's case study on the Intel trade frame with options paid off massively good today. There was some good news about Intel buying back, and that hit right in the sweet spot. The options trade he set up with TC2000 bundle paid off just as pretty as you please. So I had sent that case study over to the Tharp Institute to see if they might be interested in publishing that earlier this week. They didn't. And then Van forwarded me Danny's link. And he said I might be interested in it. I said, yeah, Van, I know. I sent it to you. Sometimes nothing serendips like serendipity, you know? All right, let's see what we had today. So yesterday, the market had, there we go. The market had pushed to a new 30-day high and a 10-day high, and then sold off sharply to the edge of the dragon and held. When we see that kind of price action, it was an outside day, meaning that the high of the day was higher than the previous day, and the low of the day was lower than the previous day's low. That's a sign of increasing volatility, and the direction was down, and the dragon had already come all the way out of the river. There was a genuine concern about more selling pressure today, and that started off that way with a gap down of about 1%, right to the edge of the Z1 at the river. And then that turned out to be about the low of the day, and it spent the rest of the day marching its way north and finishing pretty strongly, back up with the RL90 north of the dragon. And it was about a little over one ATR in the move, so it was a very directional day. So we know from our studies that in the large caps that 2 days out of 5, so two times a week, the opening of the day is within 10% of the high or the low of the day, meaning that there's at least 2 days a week on average where you're going to get a strong directional move right from the opening. And that's sort of the argument for hybrid frog style trading, is because you don't know at the open whether that was going to be the higher or the low of the day, or if it's going to be a directional day or not. It turned out today was a directional day, and it was all up. But that's one of the reasons the hybrid frog pays off, is that it gets those days right from the get-go. Yeah. And that's what we had today, was a recovery. It was a head fake to the south and then zooming back north. So let's see what kind of framework we have here. So our 10-day range is from a high of 339.57 made yesterday, down to a 10-day low made about 8 days ago at 332. So that's just slightly under 2.5%. I just put these vertical bars in as reference points. This tall red line is what a 5% sell-off looks like from the swing high. Excuse me. So that big blue area, you see, that's a 5% move. This next one is a 2.5% move, and this was about half of an ATR, about 2/3%. So what we had today was about a 1% move altogether. So about 1 ATR by the time all was said and done. Traditionally, a 10% sell-off would be labeled as a correction. That anything less than 10% would be seen as noise. But with algorithmic trading and people trying to squeeze more edges out, it seems in the last 3 or 4 years probably that what used to take 10% to trigger people to start getting worried can now be triggered by a 5% sell-off. So I like kind of knowing what that kind of a move would be. So a 5% sell-off, which would really start triggering worries, in this case, would be if it continued to sell off all the way down to just north of the of Z-1. That's also right by the peak, the previous peak of the RL270. So that would take us all the way down to 322. So in my view, then the tactical play is everything that goes from the 10-day high to about a 5% sell-off. In our case, that's almost 5 ATRs. So that would be a considerable directional move. Now we had a 1 ATR move today back to the north. The last 10 days have actually not been very volatile at all. It entered the 10-day range here. Current price is here. So there has not been all that much price improvement over the last 10 days. So that's what our net performance looks like. So that's our net. Whereas you can see the last 10 days had a net move that looked like that. So this we're starting to see, I think, some of the tactical posturing as the election starts to grind its way towards us, with people more and more likely to be cashing the gains intraday than trying to hold out for big moves. This feels like a lot more tactical trading, and I think it's just going to get tighter as we get closer to the election. We're into the media horse race season now. The 15-point lead that Biden has now been reduced in some polls to as little as 4%. And one I saw was only 2. So it's going to be getting tight all over. And what really will cause big wins and losses now are going to be moves in individual companies, more so than in big, broad index moves altogether. So this is where I think paying attention to the extreme performers on the positive side and the negative side is really an even better strategy now, because that muddling through in the middle is really going to wait. It's going to wait and see what the election outcomes are, I think, to see whose particular brand of graft and corruption will be in play. Take a look at the support levels on the way down. So the low of the day and the Z1 and the southern skin of the dragon, all in this 335.5 area, plus or minus 25 cents. So very strong support, I think, right here. The decisive move north makes me think that that's a pretty strong support level. Just below that, we would have tomorrow's PSAR at 334.5. Today's PSAR was at about 334 even. So the PSAR just continues to march north. That's almost 30 days of uninterrupted upward moves in the PSAR. That's just how strong this move up has been. This is starting to feel a little bit like some sideways consolidations here, though. I mean, I look at it, a strong move up, and now consolidating here. A slight pullback, strong move up, slight pullback. So it would take a breakout above that 10-day high, which is within range at 339.57. That would trigger something new. It would quickly get through the Dragon all-time peak at 340.5, and then the Z2 marker to the upside at 342.48. So that would be about 1.5% gain. That's about 1.5 ATRs to break out of today's range and get to the Z2 line. That's the next upper limit. The downside moves from here would have to break through the entire skin of the dragon, the entire structure of the dragon, I should say. So if it broke out, if that was the opening range tomorrow, the directional move to the downside would be through top skin of the dragon, 337.5, dragon spine, 336.6, bottom skin of the dragon, 335.75, Z1, the PSAR tomorrow, the PSAR today. The 10-day low is now, again, just about 2% below today's price, and that's at 332. That's really the key support level in my view. I would see two really strong support levels right now. The first one and the best one would be this cluster right here at Z1 and the bottom skin of the dragon at like 335. And then I would see this 10-day low as being decisive here at 332. And if neither one of those holds, then there is a great weakness in here all the way down to the Bollinger Band mean at 328. And if that doesn't hold, then it's all the way back down to the 5% sell-off in the Z1 in that 322 range. So this would start looking pretty shabby here. So I see this kind of as the yellow zone of support. I would still be interested in buying, like if it's sold off and then started to reverse back up, I could be long and strong pretty nicely. But if it were to break down below that second big thick red line, right here, then I think this is where I pick up the negative bias right here, and that's where I want to be. Whoops. This is about where I want to be getting short. With the second entry here. And then a third entry if it broke down here below the Z -1, because then you can see that it's going to come to all the way over here to the 30-day low, which gets us at about 312. So I would want to have three positions in by the time it were to fall that far. Then that would be seen as almost a 10% sell-off, and people would be looking at the negation, basically, of this entire move of the last 30 days would have been erased by this kind of a downward move. That's always a possibility, but the market is on the strength of money just flowing into the tech leaders. The market has shown a great reluctance to sell off here. Politically speaking, every administration, both sides actually want to see a sharp sell-off right now anyway. Both parties would actually like to see this. In one case, for the Republicans, they would say, look how fragile the market is. If you want to see more of this pain and suffering, just go ahead and elect Biden. Elect the guy that can turn this around. And that would be a strong argument for Trump. Um, the Democrats would say this sell-off is more evidence of the untrustworthiness of Trump and the uncertainty that the market has that he wouldn't allow a peaceful transition of power. And then in either case, both parties would actually like to come to power if they won after a sell-off because it makes it easier to get some recovery. So it wouldn't surprise me to see some kind of, up to 10% correction happening in the next month or so. So I'll be prepared for that. In the meantime, focusing really on the intraday trades and really trying to find those movers in both directions has been paying off pretty nicely. So I don't see any reason to change that strategy at all. The recovery lately in treasuries and some of the defensive sectors has me satisfied with the decision I made earlier this year to move the core positions into cash and bonds and treasuries and to ride out some of the volatility and then to concentrate more on the day trade. So I'm still very satisfied with that approach, and nothing I've seen lately is causing me to change my opinion there. So let's see what happened in the sectors. Okay, starting off with the market itself. The S&P comes in at 0.31, so a fractional gain today, about a third of an ATR. DIA was in the green, but not quite as good at a plus 0.16. And then the Russell was the laggard again today at minus 0.4. And so when I see that happening, that tells me overall the shorter term traders represented by IWM had a negative outlook today. But then when the large caps in the S&P and then the super large caps in the Dow can turn in a positive, that is favoring sort of the longer term conservative investors in traders. And that means I'm looking for which sectors are having a leadership position, if I may say it that way. So let's come back up to the S&P and then see what kind of sectors outperformed today. So the S&P was up 0.3. Treasuries continuing their little rebound here from 160 or back up to 165. Today was a 1% gain. We had tech and the commercial real estate at 1.3 and 1.5. Wheat and precious metals at 1.86. So the defensive plays along with tech are looking good. Silver had a good day at plus 3%. And then in the battle between the triple techs, TQQQ, the focused tech, was just a fraction better at 4.11% compared to the broader tech TECL at 4.08. So it was basically tech and defense, and that was about it. The companies that did well, Cisco and Amazon 1 and 1.1. Intel 1.7, Google 2.2, Apple 2.2, Microsoft 2.3, Facebook 2.4, Tesla just can do no wrong 6.5. I just held my nose and just bought some today on the intraday trade. I'll show you here in a minute. I still can't get over my psychological aversion to swing trading them, but I've at least been able to start day trading. I've added this little index, the NY FANG, and that's Facebook, Amazon, Apple, Netflix, Google. So as an index, those five were up about 2%. So that's your big 4+1 in tech land. Amazon not lagging just a little bit behind, but that's where the clear winners are. If you take them out of the S&P, the S&P's been negative last couple of years. That's just how strong those guys are, and they're getting so much attention from institutional money, which are seeing them as the blue chip, can't lose, the last ones to fail, I suppose. I put it that way. The only other company of interest, U.S. Steel, was up slightly more than the S&P. What was worse than the S&P? Well, we had Brazil at plus 0.23. Now, as far as sectors go, the consumer discretionary minus 0.15, and then this nice cluster around 0.3 of emerging markets, healthcare, Mexico, Japan, and basic materials. Industrials minus 0.5, and then some real pain and suffering in finance, down about 1%. Then the energy complex here of clean energy minus 2.1, the broad energy sector for the S&P minus 2.1, oil exploration 3.3, and then Devon Energy minus 3.6. We're going to see that's actually set up a pretty nice swing trade to the downside. Meanwhile, Nikola Motors down 3.7, Kodak just crushed, now down around $7 even, down 7.8% today. That's just basically dead man walking. Some of the companies that underperformed today: Caterpillar minus 0.4, IBM minus 0.56, Goldman minus 0.6, Home Depot, even Home Depot giving up the ghost a little bit today, and Alcoa at minus 0.78. Wynn and Virgin Galactic Air at minus 1.2. Target was not able to do the follow through today. Yesterday was a big, huge move up and gave back a nice chunk today at minus 1.28. And Walmart both. So profit taking in the retail space, perhaps. Let's see what we got. Let me check the room real quick. I got back late from practice, so I didn't have a chance to check that out yet. Hat tip to Pavel. This one, the EWZ Masterclass from February 2020, really was a nice discussion. This was, interestingly, this was a big sell-off in Brazil prior to the COVID hitting. There had been a great run-up, a tipping point, a reversal of fortune, the collapsing dragons, and then a great big long sell-off all the way back to the VWAP. And so that one's especially well done because it set us up for a critical state breakdown here, and then COVID took over and it got smashed. Let's see what else we got here. This one already feels good from Neil. It's nice when on the thumbnails you can already see it's going to be fun. All right, let's. Oh, why isn't that? Okay, here we go. So here's over. Let's see, 6R on the first one and 3R from Neil on the second one. The first one, an SSC on the futures chart, not as easy to see on the SPY itself because of the gap. He was considering additional. Let me get my little drawing ink here. There's some actual goodness in this one. So we've got the harsh sell off here. Dragon rolls over, PSAR flips, just straightforward SSC using the Wu Wei exit, and so he waits for 1, 2, 3 dots above. So then he jumps this here, keeps it in place till he hits the Bollinger Band mean, picks it up, and then he just rides the Bollinger Band mean all the way up. And that's how you get 6R on the first entry. He looked at 2 logical breaks or 2 logical points where additional positions could have been taken. So if this was 6, this probably is 2 and 2. This one would have been probably 4. And this way I given 1 or 2. So that 6 could very easily have been 11 when managed in a traditional way. This one I found tempting as a replay because of the PSAR flip, because now what you had, excuse me, come on. So what I really like is the replay that looks like this. So you have, watch it, nice leg 1, leg 2, leg 3. That actually creates one big leg 1 on the next higher time frame. So this is on the 1 minute. So this really looks like leg 1, and then that makes this a big leg 2, consisting of leg 1, leg 2, leg 3. So and then all of those look like a big leg 1 on a 10-minute chart. So you get these little fractal moves. 1, 2, 3. Second leg. 1, 2, 3. Third leg. And even though then now those 3 legs become one giant fractal play. So when you play this way, this little entry that you're getting here after the turning point, and you get an SSC, most of the time we're fighting around in this region, for the, +1, +2, +3, and then it fails and we take our little gains. But sometimes at that 2R battle drill right around in here, it doesn't fail, and it gives you that second leg. So you see 1, you plan for 2, and you hope for 3. And then every so often, you end up getting 4, 5, 6, 7, 8, 9. You might get 9 execution risks if you get this fractal action and you get one big leg. This kind of a move. So if the smaller ones were on 1 minute, and then the intermediate was on 3 minutes, and then the outer one was like on 10 minutes, you get a nice big 10-minute move like that, and that starts getting the attention of the slightly longer term players, and you can really start seeing these things take off. And that's where those great big moves come in. Now you never know ahead of time which one's going to be that one, so you got to play, with tactical soundness in here, and just they all look the same leaving the river, leg 1, leg 2, and leg 3. But I just want to point out that if you get that third entry in here, and then this thing doesn't sell off but continues to go, that's one of those that could end up turning in not to just the 9R that he's got, but that thing could have gone up another leg of this magnitude, and this one could have easily become 30R. But one of the things we want to do is get these extra positions in when we have momentum in our hand. I really love this re-entry, though. This is what I thought was special about this trade. So you have the nice move, recovery. He didn't bite the second time. He didn't bite on the sell off, although you could have played this. That ended up being a trade you wouldn't lose money on. But then when it finds support at this level, if you look at this as a support level, support level, support level, this is starting to feel, a round number there, 33368. That is such a nice re-entry. And now he's got the smaller legs, 1, 2, 3. And that's not unusual because we're deeper into the day. But it held support well above that VWAP. So this recovery run says there may be some more of this buying pressure in here. And so if we take this to be the size of the move, we can take that move, clone it, and then move it up in here and say, oh, this thing could definitely get up this far as our price target. And that makes this a really nice entry. Potential second position, potential third position. So just as nice as he could do. Well done, Neil. Just well played, sir. I mean, like, by Jove, I think you're getting it. So MNQ, he's starting with the SSC off the open using the Wu Wei exit. That's a pretty good morning plan right there. You've got something like that minimum manageable risk box right here, MMRB, or you might take this one, and now you can see he's got that move off the bottom. That's about that size of a box or that size of a box. This is how big the management box is when it's just idling, like when there's no directional effort from Z3 to Z3. How wide is that range? And then a move that exceeds that off the bottom, well, that's an SSC. You could also think of that as a hybrid frog. He's got a couple spots where he could have added positions. Very nice manager exit here. He waits. So here was our entry. He waits for 1, 2, 3 bullets off, above the entry, and this is where he accelerates the stop to. The piece tracking the PSAR would be an aggressive, like a sniper exit. This one is the relaxed, effortless action of the Wu Wei that's fallen all the way up. And in both cases, you probably end up getting out at about the same spot. This was a reasonable effort to go short because you're really front running the Z3 breakdown, right? And you're looking for targets of the RL270 and then back to the VWAP, and you're only risking this much. So that's 1, 2, 3, 4, 5 chunks down to fair value. And that's perfectly reasonable. This is a very nice exit. I wouldn't have been offended if you took that and went higher. And I think that's what we did, stop and reverse. And this was a potential. If this had gotten you out, this one would probably get you back in. This would be not an unreasonable place to add a position because you're breaking above the previous Z3, and here's the RL10. So any an additional entry in there would have been fine. If you had taken a second entry, then you'd probably be taking the sniper rather than waiting for the manager. This is one where after, probably 10 bars and nothing but selling, I wouldn't be offended if you'd accelerated. But then just how nice is that re-entry? You get 10 bars of nothing. And that's the same size as that previous MMRB. If you take a look at the size of this box and this box, that's the size of this little idling range. And then again, perfect entry, Wu-Wei exit, 1, 2, 3. Keep it in place till the Bollinger Band mean catches up. Just as nice as you want. So there's another 5. So that's 15R. Not too shabby. From 9:30 to 12:30, 3 hours. 15R. Word to your mother. Griff working with EWZ here. Yeah, it asks the all-important question. I wonder if I practice this enough, if I could do it in a live market. There's exactly one way to know, and that would be the whole point. 13 trades, 9 execution risks. Nice capture, nice stop and reverse. This is a nice second effort to get the second position in. Great sniper exit. Great on the short side. Reasonable. I think you might have gone here on the long side rather than waiting here, but I'm not offended by this. This way you at least get above that Z3 and you still caught the fat part of the tail, and I like that you used the tighter stop. And then you accelerate it maybe a bit quick. I think the Wu-Wei exit would have been more like this. But I really like the sniper exit here because you saw this excursion beyond Z3 and started to sell off. Bang, take it. Good scratch, good stop and reverse, good scratch. This is a great short because you have a double top and then a MMRB flip and very nice exit, and then Wu-Wei exit. Yeah, and all the way through, bar by bar, just practice the crap out of EWZ. 13 trades, 9 execution R. Answer your own question, Griff. The answer is going to be yes, you can do this. Specializing in one pattern in each direction with a single symbol. That's how you do it. Let's see, this is Dave. Let's see. So here's the opening, or the close, and then the open. So you got this fractional gap down. There is the sell off in the RL10 and the PSAR flip, and I really like that entry. Nice. And this the pure Wu-Wei exit would be something like this. This one was basically tracking the PSAR. and then once you cleared this hump, then waited for the Bollinger Band mean. And the advantage at the end of the day, there's not that much difference in those two exits, but the relaxed Wu Wei gave you two chances to try to really go. Very good patience in here. And then just notice that there was one urge up. It came back and still held support where it had held support the whole way. This is one where I think you could get here if you take out the hump of the dragon. That's like an emerging dragon right there. Or the hump of the RL10. I think you could get this exit or entry instead of this one. I think either of these would be preferable. And then you could always just elect to scratch that here. I just think this, oh yeah, entered late and probably watching something else. And this is a loss we should not be taking. When it crosses the Bollinger Band mean, that thing is done. Because it's back inside this big, long trading range. It ran out and then gave you 10 or 15 bars and nothing. I don't like holding it for that long. If anything, I would have been interested in going short here because this looks like a fake one, go two. This is a good recovery and reset. Look how it just keeps holding that key price level right above the VWAP. Right, that VWAP has just been solid support all day. Beautiful entry. There's your, one wrist box, two wrist boxes. I'd have been tempted to take the sniper right there going into the lunch. But it held. This would have been a reasonable one, but I like that you waited for the VWAP. That's fine. Or the PSAR flip. And then you're not really risking much with this entry here and a stop right there. So why not put the second one on? That was worth taking the shot and out of both. So 1.47R, pretty nice. I just think there may have been some attention to not attention to detail, but span of control issues in here probably. But pretty good work all the way through. And oops, okay, I opened it twice. Okay, so that was that. Next word from Dave. I think we already saw that. Good. See what we got in here in a swing trading. Nothing. And we saw those yesterday. Okay. All right. I want to look at some of my charts of interest now. So these are some swing trading critters here. All right, so this is TQQQ. So this is 3 times the Qs. In Chinese, that would be San Q. Thank you. So San is 3 Qs. So what we had was a summer, fall, and then this little reversal. This got me interested here. It pushed this high, sold back to that level, and then made a higher low. And the PSAR and the Bollinger Band mean are acting favorably. So this now looks like this kind of a channel. So it wouldn't surprise me to see this kind of go here, 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 here. And in fact, if we just draw the midpoint of that channel, it gives you some sense of what an upward move might look like. Well, that's what that dragon really is doing for us. You can see that in this case, the dragon is giving us this strong support all the way up. So as long as this price stays north of the dragon, and the dragon is north of the Bollinger Band mean, that's what a strong upward move looks like. You have a strong river flowing up. The dragon is on the correct side of the Bollinger Band mean and acting to push price north. So that's how it feels to me when I'm thinking of this hydraulically. So on this move, up, down, up, down, up, that made this a low risk entry using the bottom of the dragon. I would also accept, the PSAR as your risk box. The next day, it gapped up, sold off, and then as it came back above the previous day's high, I added a second position, which was paid for by the move off the low. So I've got, when I'm thinking of core and turbo, my first swing position is here, second position here, and then today was a third swing position right here. So in each case, what I'm doing is I'm using the intraday move to fund the overnight risk. So I try to make money on the intraday trade and then just keep 1/5 of the day trading position as the swing trade. And then as long as this continues, come on, Ken, there we go. So as long as this thing continues to go up, I'm just keeping 1/5 of the day trade with these as the swing trade entries paid for by the market's money. And what I've done is I've moved my stop on this up to this level. So all three of these positions are in the money because my stop is at this level right here. So I'm trying to build that position with market's money. So my stop here is now 136. And my intention would be to add another position, like if it takes out this month, like if it opened here and then started going back up, I'd be adding, by that time I should be long on the intraday, and then I would keep a swing trade that would be my fourth position long, and then I'm really happy. I like that because it's above that previous Z3 pinch, and this thing is just often going. So TQQQ is fed by, Amazon, Netflix, Microsoft, MSFT, Google, Apple. So if you don't know which one of those to pick, you get this, and it's triple leverage. So that ain't bad. All right, this is Tesla. And like I said, I just can't bring myself to get past my psychological blocks of holding this overnight. But I have been able to start playing these intraday moves. And again, here's two examples where the opening of the day is in the bottom or top 10% of the day. So it becomes a hybrid frog dream This is another one that followed through. These 2 days it didn't, but the moves of those 2 days were just massive. So this went from 1840, to 2100 or 2050 today. So, $250 worth of a move. It's just that they can do no wrong. This one is, so this one's Microsoft. And we had framed this trade before as a yellow region here. So it rejected, this 2 sell-off and immediately recovered, got sideways choppy. And then we said the blue box would be the first tentative move up to the PSAR flip. And then this is where a move into this green box would be really powerful. So today's trade in Microsoft, I basically made a mechanical entry when it got above yesterday's high. And so I'm holding a swing trade from here with a stop down here at the bottom of the yellow zone. And then if I get any kind of movement tomorrow, I'll be adding a position at the PSAR dot so I can have 2 positions going north to Z2 and hopefully to Z3. Because a breakout above 216.20 breaks the RL10 hump, breaks the previous RL10 hump, and then this is the size of that next move up in here. So I'd like to have 2 positions free and clear going north of 216. I wouldn't be offended if you moved your stop from here up to, approximately, like right about here, so that you're, slightly in the money. That wouldn't offend me. These charts are on, I think I hung them on Patreon, by the way. So this one is Apple. This is another one I just had to hold my nose and finally get long on the breakout above the high. I mean, this thing has moved from the last consolidation zone. We got long here, took an exit, took a reentry, suffering. I ended up exiting up in here, and I missed this reentry until today. I finally just couldn't take it anymore and said, you know what? Go ahead, take this entry, and I'm using the bottom of the dragon as my stop. But I wanted to just own it finally. Next one up is Walmart. So we had identified this as an interesting support level because we had 2 strong support levels here. Then it broke out, consolidated, sold off. But now you can see that that rising Bollinger Band mean makes this an interesting support level because we're playing for a return to the RL10. And so we get the breakout from here, and it rises up right to that price. And then it has a gap up, and then it has a harsh sell. The next day was a hybrid frog short when it broke below that bar's low. So first position short. Today was the second position short when it simultaneously broke below yesterday's low, broke the Bollinger Band mean, and broke through the dragon. So we've got clear this out for you to see. So today was basically a 1, 2, 3. This would be bar 1. on the that peak. So bar one on it went beyond Z3 and then collapsed back through. On a better day, I would be on that one. If I was a better person. That's bar two, and it made a new low and broke through day one bar low and then finished down here. So that's bar two. It made a new low below bar one without making a new high. So that's bar one. That's bar two, and then this becomes bar three. And as soon as it gaps down, you can actually get short on that. Because it made a new low compared to bar two without taking out the bar two high. So you can actually get short right there, and then it finished up down here. And then on my short position on this one, can't see it. My initial risk was up here at the edge of the dragon, and now I move it down to here, so I've locked in that little bit of a gain. You might have taken this one short on a rejection of bar one, so I'm showing that as not a crazy short. This one is the better short for me, and then my target's going to be down here, basically to Z2 and then Z3 fair value. So there's still plenty of room for this thing to fall. This one we talked about a couple days ago, and this is XLY, the consumer discretionary. So we saw a strong consolidation zone and then upward pressure, and it broke out above the box. So long here with a stop either at the box or at the PSAR. I'm agnostic on that. And then a really nice move, and this is the one that we framed when a couple days ago when we said, let's take a look at that. It's gotten through, two or three of these yellow boxes, pause, another leg up, and now it's beyond Z2, and then started to roll over yesterday. And what I had said yesterday was I would put a 2-bar low for a sniper exit, and then a skin of the dragon exit or PSAR. So this one got me all out today because that was such a nice move. I didn't really want to give back more than this move from the top. And that feels like a really nice move. Where would I be interested in shorting this thing? Well, you would have to be short if it broke out of this yellow box down. So you'd have to at least be short here. That would be the conservative play. You could even argue, if it breaks the Bollinger Band mean, I have to be short there. And then the question is, would you also want to be short if it broke the PSAR, so that this would be your second entry? Or would you even bring that up as high as the skin of the dragon? I think I would wait for the PSAR, and only because this move here was so strong that I think there's going to be buying pressure down around in here. Now it's only had 1 day sell-off, so in fact, if this thing turned and then reversed back up, starting tomorrow, I mean, it could very easily start doing this. So where I would want to get, where my automatic get long position would be, I would say break out above the RL10. So I would be getting long in this thing automatically at about 146.5. And I think my short position would be here. which now makes this the yellow zone for me. I guess you could convince me to get long here as well. If it broke out above today's high, that would be like a mechanical entry. Yeah, I think I could trade. I think I could do that. I think I would do that. So for me, this would be the yellow zone right there. And the more I look at, and if I'm trading intraday, you could probably convince me to get short on a breakdown of Z1. And I also think if I'm trading with a hybrid frog, I could actually get short on a new low. So if I'm using end-of-day data, that big red arrow is where I have to get short at with my first short swing position. But I think I could be trading in this space with turbo intraday. So the turbo trade looks something like this. But if I was just using end-of-day data or even like hourly charts or something, I think the this arrow here, the PSAR, the break of the PSAR is where I get short. Okay. This one is Devon Energy, so this is daily. So this had been on just a really nice run. Followed by an equally horrible sell-off. It took me this long to finally adopt the short side on this move. It took that much of a sell-off, and then first short position here on the RLXD, and then a second position today when it broke below the Bollinger Band mean. I took that, so I've got two positions short. Where I want to put my stop on this, and I'll leave that in place for a while. It's like right here now, and I will let that fail. I'd like to see that get down all the way to here. So I think that means I have to be ready to add another short swing position right here. So that's my plan for Devon Energy tomorrow, to crush it while I can. But then on the other hand, if it gets that far and then just holds, like I recognize this as a really strong support level. So if it gets, like if it doesn't leave this box tomorrow, like it just gets down into here, and then starts to recover coming this way, then I think that's the kind of move it would happen. So the first move would be up to the Bollinger Band mean. Second leg would be to something, probably Z1, or call it the far side of the dragon. And then move leg 3 would be up here to the PSAR dot. So there's some real potential gains in Devon, and all that is simply recognizing that the last buying pressure took it from this support level, pow. And then, so if it finds support here and does that again, you can't be surprised. It just did that, And the reason it may be ready for a rollover is that the size of this move down it's already made that move. And here's the sideways move. Here's the up move. So if it actually holds here, like it doesn't even go further into the yellow zone, just starts moving up, then in fact that would be seen as a support, higher support, and a higher support, and then that would really make me believe that this could really come all the way back up to 13, and that's a 30% move. Don't let the little numbers fool you. All right, final one. Let's see what we got here. This is the Clean Energy PBW. So this is one where, again, we had a 2 entries on the initial breakout from a critical state. Got 1 entry, second entry, worked all the way up and took the exit on the RLXD. So we had the nice move up. So the next leg up could be just like that. That's what I was hoping for. Hope is not a method. This one had the slight pullback, which got me out here. It continued a little further, and then the rebound got me back in. And again, this little pullback here was enough to the edge of the dragon that I had seen leg 1 and leg 2, and I wanted to make sure I was locked in. I had programmed a sniper exit and a managerial exit here to protect this second leg up. But today, the everything energy sucks so bad, I just said, let me just go ahead and cash it now. Now, what I'd really like to see it do in terms of stalking is I would like to see it hold above that PSAR dot and certainly above the Bollinger Band mean. And I'd really like to see it. So if it just started taking off from here, I'd really be happy with that, because this would feel like this is a supported spring. That would be a supported summer crossing. That it never even got through the dragon. It hasn't even penetrated the dragon skin yet. So if this just started taking off, I'm getting back in. Certainly not later than the top of this box, but I'd like to be able to get in somewhere in this, let me show the blue box region here. I'd like to be able to get in there. But if this thing sold off as far as the PSAR dot and took off, I would still try to get in. I think right around here. I think here or not later than here. Yeah, certainly right in there. So that's what it looks like for PBW. It's a really strong sector, but you got to be mindful of the other members of energy. So of all the energy complex, this one is much better. If you look at XLE or Devon Energy or Chevron or ExxonMobil, none of them have this kind of strength. So that clean energy clearly has some people committed to the longer term rebuilding of America with technology and energy and self-sufficiency and all that. Yeah, Griff said, would it be possible to post the podcast from it? I think I already did. You should be, make sure you're signed up for the YouTube. I don't know, maybe I didn't post it in Patreon, but I'll get that posted next. But it's already on Patreon, or already on YouTube, excuse me. And I was pretty sure I posted on Patreon, but I'll do that next. So that's everything I got for you guys today. Lots of goodies for tomorrow. The daily report has plenty of things to look at. I'll let you read that. But I just think it's all tech, balanced by treasuries and Wheaton. So I'm ready for either one of those to be the leader tomorrow. As an outside chance, the energy has been beaten down so much that it may be time to rebound. We saw that in Devon. But I think it's more sectors and individual stocks than it is the market right now. Okay. All right, that's everything I got. I'll get the Patreon link or the yesterday's posted on Patreon right away if I haven't, and then this other one will take an hour or so to get posted. Anyway, that's all I got. Take good care, and we'll see you in the chat room tomorrow.